The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the show like we usually do with the DAX index. And as you can see, we made a Gartley here that we were talking about yesterday. Went right up exactly to the 0.618 retracement. And if we take a look at the FTSE, which will be the next one we'll take a look at, it also went right up to that 7,700 level, which was a retest of the 78% level. And it also backed off a little bit. This telling us that we probably were looking at maybe a lower market this morning. But this morning, you know, most of the market was covered because of what's happened to Microsoft. Let's just put this Microsoft chart up so you folks can see what's really happening here. You'll notice on the far right side in that black imprint where it says 108.13, that's how high Microsoft was trading earlier this morning. It gapped up above those old highs at 106 and ran all the way up to that level. And that was because of evidently good earnings with the cloud. And but anyway, that I'm just showing you that is certainly a failed pattern, because once you go busting through that 1.618, that is a very, very bullish sign. That's your last stand of self-defense when you're trading. You don't want to be short anything above 1.618. That's for sure. Several people have asked whether the gold bottom is in. If you have to put a to roll the dice, I would say yes, I do believe that it's in. The reason for that is the number we were looking at was right around 1218 to 1220. We got down to 1210 on a fast tick based on that South Korean exploring team that supposedly found $175 billion worth of gold. It turned out to be 8 billion or less, but we don't know what's going on with that. I don't think it has anything to do with the market actually, but we did have a drop in open interest, which was good. That was another thing that we were looking at, but we made almost the exact 61% retracement from December of last year. So that I think is very important. And also the fact that that silver was right down to that level we were looking at. It came within about 12 cents of the really big picture, which was down around 1510. We were very, very close to that. So that's pretty close. And then also the platinum. The platinum made a new low and had a pretty good rally. It's rallied over 20 some dollars, as we have in gold. So that's what my assumption is. But folks, below $1,210 per ounce, you do not want to be long the gold market. That's just my 2 cents worth. Now at the break, we're going to have our good friend Rich Anderson on to talk to us about some of these grains. They're in the news, of course, today at CNBC and Bloomberg. They're talking about the poor farmers and how bad off they are. Folks, there's again, you know, what they're saying and what they're doing is two different things. We happen to be good friends with Cy Monley, who's one of the largest hedgers in the United States. And believe me, 98% of all of those farmers have hedged their beans around that 10.50, between 10 and 10.50 a bushel, because their break-even point is $9 a bushel. And if they're making 10.50, they're making a very good return, you know, on their beans. And in order to get their loans to buy the seed, pay for the equipment, and lease the land, if that's what they do, they have to go through a bank, and the bank wants that stuff hedged. Now, someone's asked, who's losing? Well, the people that went long, that thought that, you know, when we were into that triple top up there right into the weekend of Memorial Day, it looked like there was not going to be any beans and corn because it was so hot, the hottest May that Indiana had ever seen since 1937. And look what happened. The weather turned nice, and bada bing, bada boom, down they come. So trade what you see, not what you hear. Anyway, let's take a look at something that I think is really, really important, and that is this U.S. dollar. Here's where we were, folks. Let's just do this. I want to do this in sequence so you can get an idea of what you know, we're trying to see here. Here's the long-term weekly chart here of the, and they're talking about this a lot on, hold on one second here. There we go. This is talking about this breakout here on CNBC and on Bloomberg this morning, the breakout of the US dollar index above 95. This is that weekly pattern that we showed you yesterday. And all I would like to do now is sort of break it down to see what's, really happening with this. So let's take the second section of this and take a look at this chart on a little bit different basis. Now here is the same chart, and all I'm going to do, and this is on the daily basis, I'm going to bring it up here so you can see it. You'll see the double top, and you'll see the pattern that I have pointed out there. But now what I want to do now is I'm going to put this under a microscope to show you what I was looking at yesterday, because several people asked me, about that level at 95.50 in the dollar index, which was equivalent to that level of 115.75 in the euro, and I just wanted to walk you through it. So here is the same pattern that we were looking at in the dollar index, and all I'm going to do now is I've blown this up so you can see it, and here's that pattern that we're looking at. Look what you're looking at here, folks. You're looking at a double ABCD up there at that 95.50 level. You'll notice that the ratio between the 22nd of May and the 25th of June came in exactly at 1.12, and the ratio between the 25th of June and where we are in July now on the 20th came in at 1.12. Well, that 1.12 is very important for a lot of different reasons that we don't want to go into today, but the main thing is to look at that ABCD structure that's there. You have two major ABCD patterns over a period of 1 month that tells you that there should be some very strong resistance in that dollar index at that time. Now, at the same, I hope it posted, maybe not. Let me double check. Bada bing, bada boom, you're right. It did not post. Sorry about that. Let's get this post up so we can take a look at it. Shut the front door and raise the rent. That's probably, something's wrong. We got trouble in River City, boys and girls. Let's see what's going on here. For some reason I am been kicked out of the den. I don't know if I'm being heard or not, so I hope that I am. I'm just going to continue talking, and as soon as I can get back into the den, I will. I'll repost this chart for the dollar index. I believe that it's that important because it really shows you over the past 6 weeks what is happening, on a technical basis. So hopefully that's it. I'm continuing to talk. I don't know if anybody's hearing me or not, but since no one's called me, my guess is that it seems to be that we're going to be okay. I'll be back in the den here in just a minute, and then we should be okay. There we go. I think that'll do it now. We should be back in the den, and let's just get this up here so we can take a quick look at it, and then we will be okay, I hope. I don't know if you folks have heard me during the time I've been talking or not, but let's hope. This is that blown up picture of that dollar index. I wanted to show you those ratios that are there. But the main thing to look at is that double ABCD pattern. That's the key to what we were looking at yesterday when we were watching that dollar index. And then the next thing we're going to do when we come back from the break is we're going to look at the euro and show you the same thing that we're looking at.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to expand on the show that Steve Rhodes did early this morning about the secret to investing. And the question that was posed is, you buy low and you sell high. Well, to put that little rule to use, let's go back and read a book that I really love. It's the autobiography of Bernard Baruch, one of the greatest speculators of all time from the 1930s, a very close personal friend of J.P. Morgan and also several of the presidents, because he acted as a consultant. And one of the big movie stars of that era was Fanny Brice, and she wanted to meet the great speculator, and so she did. And she sat down with him and she said, "Mr. Baruch, what's the secret to making money in the markets?" And he looked at her and he said, "Miss Brice," he said, "it's you have to buy low and sell high." And she said, "I would like to learn how to do that." He says, "Well, if you've got 40 years, you can start today." So that's about how long it takes. But Steve made a good point. You know, if you're going to be looking at lows and highs, try to find a pattern in there that'll give you some idea of what your risk is, because that's what you're really looking at. The name of that book is My Own Story by Bernard Baruch. It's you can still find copies of it. It's relatively rare, but it is an excellent book, and I really enjoyed it very much. He was a very, very brilliant man and extremely big in giving away money philanthropically. Anyway, let's move on here to take a look at a few other of these markets. We'll have Rich Anderson on in about 10 minutes, and we're going to be talking about these grains, because we've got a possibility now of these markets at least have some sort of short-term bottom, even though the news is getting more and more bearish as far as if it is bearish about the trade wars. You know, we'll see. Now, if you listen to anything on the news, CNBC or BBC or Bloomberg, you're going to get, you know, there were 2 or 3 people on the last couple of days. One was saying that the tariffs were a good thing. Another one was saying the tariffs were a bad thing. But, you know, nobody knows. You look to see what's happening with the markets, and you can see they certainly, you know, haven't backed off very much. And that's usually the case, that we're having something interesting going on, as we can see. Now, we talked about that E-mini S&P when we went up to that 28, 12 to 15 level several times. And this was on a key day. If you remember, July 19th was one of the key dates that we had from our good friend Stan Harley from the Harley Stock Market Cycles letter, and he will be the one that will be our guest next week, and we'll also try to have Bill Meridian on also. So both of those we're watching. One of the questions that they're asking today in the Tiger Den is about the crude oil. Folks, the crude oil had some type of a major top up there at that 73 level. It had some bearishness. We had a great deal of confirmation because the gasoline futures and also the futures for the heating oil, both of those were showing, major divergence. This is where we were, coming in last week. You can see this because we cover this in the newsletter here. And you'll notice that we're almost down to those price levels that we're watching at that particular time. And if you look at the gasoline, which it should have been the most bullish this time of the year, has also, shown some bearishness too. So we're getting close to what we think is a tradable bottom in the crude oil. Should be down around 60, 66. We got as low as 67.5, I believe. Around 66.50, I believe, is the last equivalent correction. So that would be from 73 to 66, about a 10% correction. And if it's a good bull market, it's not going to give more than about 10% of that back. So we'll see what's going to move on with that. Oh, there it is. My Own Story, Bernard Baruch, $15.99 on Amazon. I imagine it's a very used copy, but that's a pretty good price for an old book like that. Thanks, Marshall. So you can get on Amazon. You can find almost anything. Boy, when I used to search for these books, I had to go to the Investment Center bookstore because Don Mack had a monopoly on all that stuff. He was the one that bought it all. And boy, believe me, in that Los Angeles area, there were some old-time people. That's a new paperback? Get out of here. It's been reprinted. I find that hard to believe. Wow, that's terrific. That shows you the value of the book. It's been written, 80 years ago, and now it's back in print? Fantastic. Wow, that's really good news to hear. I wonder if the other book that's really as good as the, what's the book by Lewis? Only Yesterday. It's the story of the stock market between 1910 and 1932. It's called Only Yesterday, and I believe the guy's name is Lewis. Check that one out, Marshall, because if you ever want to get a great book, I paid 10 cents for that book. I turned down $20 for it several times, but it was a little paperback, and it was called Only Yesterday, and it explained how things happen. Now, that book was written in the 50s, I believe, because at that time, 1929-30 was only yesterday. So we'll see what's going on. Somebody gave you a perfect, yeah, I bet you they did. They must have really loved you if they gave you a first edition of that Bernard Baruch book. Anyway, let's move on. It's $11.99 is for the book. Only Yesterday is on Amazon. Is that true, Marshall? Double check that for me, would you? Copy that, 10-4, Rubber Duck, 10-4. Speaking of Rubber Duck, wow, that's a good, folks, if you want to get a good book for yourself, go to get that book. It's called Only Yesterday, and I believe the guy's name is Lewis, but it was written in the early 50s, I believe, but boy, does that got some great information. Do you realize that in 1929, folks, there were over 2,000 auto companies in the United States? Over 2,000. You talk about competition. Also, during the Depression, during that time, the American Telephone and Telegraph, telephones, I mean, we use telephones all the time, I think. And even that company went bankrupt twice. So, and there's no more original stocks in the Dow Jones. General Electric was the last one, and it's Frederick Lewis Allen. I knew it had Lewis somewhere in there. That's Marshall, you're just... Thank you very much, Marshall. That's great. But the name of the author is Frederick Lewis Allen. Only Yesterday. Boy, that's worth $12. Believe me, that's a great little book. It really goes through the history, and it's just terrific. I think you would like it very much. Okay, let's move on to a couple other things. Oh my gosh, we've got 1 minute to go before Rich, and I wanted to get a few more things out of here, if I could. Especially these currencies are moving, pretty dramatically, so we want to watch those really closely. I've had a request to take a look at the Canadian dollar, and we've been looking for a little bit more of a rally in this. We're getting close. In other words, the Canadian is weakening. We needed to get up to that 133 level, and we'll see, what's going to happen to it right there. But the key to watch, folks, is that dollar index. If we ever close above 96, then it is off to the races, and then you're going to find out what these tariffs are really going to mean, because that'll be money moving. Right now, the dollar is doing much. In fact, the big joke today was they talked about the big reversal in the renminbi, the Chinese yuan. The high had been 6.8, and it was trading at 6.77 or something like that. I mean, it was just barely down on the day. I mean, that's just not good reporting. I mean, the people that put that in there don't know what they're looking at, because that is basically a very, very slight sell-off. So that's we'll see what's going on. David, is ISRG, is that Intuitive Surgical? Because if it is, I know the guys that started that from San Luis Obispo, one of the doctors who was from that area. 877-927-6648. Stay tuned for Rich. We know the Grains Anderson.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have some technical difficulties reaching Rich this morning. It might be related to the market. I'm not sure, but we'll try to get him if we can. If not, we'll have him on early next week. We got Rich on the line now. Rich, are you there?
Here.
Hey, thanks for coming on. Pal, let's start out with the corn. You know, we had that 3 drive to a bottom down there at that 353 level. Do you give it any odds of holding that level? And what do you think's going on with the tariffs, Rich?
Well, I think that they're starting to talk, and that's a huge step in the right direction, in my opinion. And the markets, if we're trading strictly on the supply and demand, I figure it's at least worth 10 to 15% more than it is right now.
Mm-hmm.
The weather report was considered negative. The weather's just absolutely perfect, yet the corn continued to rally yesterday. I consider that a good sign that something else is going on, and that's why, even though we got good weather, the market's continuing to firm up. So I'm slightly optimistic. I have to tell you, slightly optimistic.
Okay. Well, we've had a like 35-cent rally in the soybeans, but certainly that's not very much. Now, Rich, we talked to Cy quite a bit, and most of the farmers that he deals with, well over 95% of them, they hedge their beans up there at that 930 to 950 area because that was a really good profit. Now, someone's asked the question, what happens to this grain when it comes in? They've already sold their crop. Can you explain to the folks, what's the dynamics of where these beans move? Because the people that bought it up there, the speculators, they're the ones that took it. In fact, the hedge funds got hit pretty hard, but they're the ones that got hit the most, isn't it?
Yeah, the specs were long, but there's plenty of farmers that weren't hedged either. I mean,
mm-hmm.
And what we've seen is the price in Brazil shot up on the anticipation that China's going to strictly start buying from Brazil. And so then the rest of the world, is not going to pay extra. They're coming here, so it all, it's like the water goes to one side, and then the rest of the water goes to the other side. It evens out, and then China says that the 25% tariff won't impact its crushers; that they'll take care of it. If they charge it, they'll give it back to the crushers. So it's kind of a moot point. That there's no way that China and the U.S. can have balanced trade because we're a consuming nation and they're a producing nation, and we just don't buy enough of. We don't produce enough of stuff that they want to buy competitively. There's things can be done to improve it, but to absolutely balance it, that's quite another thing. And I think you're going to start to hear that maybe we're getting something done down in Mexico, and we'll get some kind of a trade deal going there too. But I see the internals in the corn, like rallying on a day when the fundamental weather forecast was negative for the corn, as a positive that we're at value. And this is a multi-year bottom that's being developed in the corn. This is not.
Yeah, it sure is.
We're always focused in on what's happened most recently, but when you take a look at a weekly chart and you slide your chair back about 4 feet, you get the bigger picture.
That's for sure, Rich. Remember,
at least every weekend.
When we first started trading, corn used to be $1.25, and it would trade at about a 2-cent range for the whole week. You remember those days?
I know. I have a friend that has an office in Oklahoma. His dad traded out of that office, and they would send their orders by postcard to the Chicago Board of Trade. That's how they traded in those days. They sent a postcard order in card. I want to buy a contract of wheat at this price, because that's how little it moved.
I remember using the ticker tape at home, and oh my God, it was a disaster because it would stick and you wouldn't get the thing. And I was trying to keep a 15-minute chart on corn and beans, and oh my gosh, of course they didn't move like they did move now, but it was still hard to do all that. So
I know I kept little point and figure charts by hand, and of course you couldn't go to the bathroom during the day because you'd miss some of the information. The world's changed so much. But
I remember
money flow is what it's all about. Bottom line, doesn't matter what market you're talking about. The money flow is what it's about. The market I'm watching the closest to give me some idea that something's getting done is copper. Copper has a PhD in economics.
Yeah, boy, it's had a 30
bottom in copper.
Yeah.
The U.S. and China are getting something done. And frankly, if we close today above 272.
Mm-hmm.
And I'm not a copper trader, you know that. But I do watch it to give me insight into all the markets. By the way, aluminum was up today, and I don't even, I only know what aluminum's used for. I just happen to see the price,
Beer cans, Rich, beer cans.
Yeah, well, that's true. But in any case, those are signs that we're getting something done with China. I don't know who it is or what it is, and that's going to reverse the trend in a lot of these markets. I mean, beans can be $1 higher easily, even though that we got quite a few beans in the world, and corn can be up at least 50 cents, and corn is where the real tightness is. I mean, we're actually going to have to feed wheat in some parts of the world this year because of corn crop problems, not in this country, but over in Europe.
Mm-hmm. Wow. Hey, Rich, we've got a question for one of our listeners here at TFNN. Why did the Merck stop trading pork bellies? Was just volume dried up, or what was the reasoning behind it? You're a good friend of the Seagulls. What did you hear? What was going on there?
Well, there was not a, there's a small group of people that knew the fundamentals like the back of their hand, and the specs couldn't compete against them, and so the volume just went away. And the volume today from the hedge funds and everybody else is the new pork bellies is cattle. Mm-hmm. These hedge funds get in there and they run these cattle up and down, which, by the way, there's a cattle on feed report today and a cattle inventory report today. Interesting side note that in the first 6 months of this year, we've killed about 330,000 more heifers than a year ago. That's because a year ago we were starting to build the cow, continuing to build the cow herd. We're no longer building the cow herd, so those heifers that were kept for breeding are being slaughtered this year.
That means supply is going to tighten up into the future, right?
No, we grew the cow herd, and so now the cow herd is much bigger than what it was. It had been sold off because of the drought in the Southwest. Mm-hmm. Okay. So no, I don't think it'll tighten up measurably. I think the inventory report today will show that we're 101, maybe 1% more than a year ago, that kind of thing.
Well, and do they still have the violent I trade cattle maybe, once a month now, and usually just for day trade or so, but don't they usually have the volume when we have a cattle inventory like today's report? That's usually a really big one. Isn't that the one
quarterly report?
And doesn't that cause a lot of volatility in the market?
Well, theoretically, it would have more impact on feeders than on the fats. Because it's really about the cow-calf herd and the total amount of all cattle, including dairy cattle. Okay. So yeah, it's likely, but it'll come after the close, and by Monday morning they'll be focused on something else. But, doesn't Packer pay up for cattle? They've hardly bought any cattle this week. They normally buy them on Fridays. In a deal like this, what do they pay for the cattle? Do they wait till the cattle and feed report comes out? And if it's a disappointment,
Hey, could you stay with us? We'll pay a few bills.
Sure.
We have a couple of questions that folks want to ask.
Things that caught my eye. Sure.
Okay, we'll be right back. Rich Anderson, Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Rich Anderson of Anderson Capital Management. Rich, let's talk a little bit about foreign exchange markets, because we're seeing some huge moves here.
In the Euro Day.
Yeah, I know, it really is. What's your feeling here on foreign exchange, Rich? What are you looking at?
Well, you know, the dollar's gone straight up, and this morning the president was on CNBC and said, well, they asked him what do you think of interest rates? He thinks they're too high. Every president would say that because they want growth, but the Federal Reserve has a dual mandate to manage inflation and growth, and so. And historically, I think it was the first George Bush said something about interest rates way back. But for the last 20 years, they've kind of laid off that. It's an independent agency. But when he said that, I think that put pressure on the dollar, in my opinion. And I'm not a Fed economist, but in my opinion, it put pressure on the dollar. As you'll see, the dollar's down, and all these other currencies went up. And frankly, cheaper dollar helps us sell stuff, and that's, stronger interest rates, higher interest rates makes the dollar strong and makes our stuff more expensive to the rest of the world, and we're playing this negotiating game right now. So, that's where he's coming from. Go ahead.
That was good. How do you think this thing is going to work out with these tariffs? Do you think they're going to come to an agreement down the road here in a few months, or is it going to get into a major trade war?
Oh, I think they're going to come to some kind of an agreement. I mean, a trade war hurts everybody. Well, look at the Hang Seng Index, kind of give you an idea how well it's been working for the Asians. Mm-hmm. I don't trade the Hang Seng, but I understand it might have been down a little bit in the last few months.
Yeah, just a bit. What?
I know you follow it, but
we have
I'm
a lot of
watching the
friends
copper to give me the early clue because I'm not sitting in the room negotiating with them. Two of the markets that caught my eye. One, I thought natural gas had kind of a nice reversal yesterday. I'm not a natural gas trader, but whenever I see a pattern that I like, I start watching it more closely and get involved. And I think the platinum might be leading the gold. It looked like it might have had enough of it had a test of the lows and held, and now it's up today. I think that might be another indication that, something's getting done, and people are going to be more inclined to, put some risk on, put some money back into some of these things that they've been taking money out of recently.
Yeah, that's for sure. The gold and silver has certainly been beaten up over the past several months. And did you hear any news about this freighter from South Korea that found this huge catch of gold, and then someone came on and said, well, the catch wasn't nearly as big as they thought it was? Did you hear any news about that at all, Rich?
No, I tend to try and I don't even have the CNB. I don't even have the TV on anymore during the day. I come in, I don't even have the lights on. I just want to see my screen.
Well,
you know, a dome of silence.
yeah.
So I wasn't involved and didn't hear about that story. But
Well, they were
certainly
chatting
enough
about
people
it.
would have that, and these some of these bots, any story that hits Twitter, they're watching Twitter, Facebook, all the news channels, and the news channels, frankly, are watching Twitter and Facebook for their stories. And so these bots, they pick up these stories, and then they're automatically programmed to sell. Mm-hmm. And then they pick up these stories, well, it wasn't, and then they're automatically programmed to buy. And you and I can't even click to put an order in as fast as these guys do it.
I know.
We have to be in another time frame, something that's much longer, because our latency of order execution, and order entry, we can't compete at that level. We have to go to a different level. I think, I'm looking for things that have value. My eye is caught by the hogs. I think the hogs may have some value down in here. These hogs are a huge discount to cash, huge discount to cattle.
How close are they to the cost?
It was China, but I think we'll get something done, and there'll be a bounce in, into 1st of September, and then maybe they go lower after that. But
what's the cost
for things that have value?
Rich, what's the cost of production on December hogs, roughly?
Just off the top of my head, I would say that it's probably 52 cents.
So it's really close to where they're trading.
Doesn't mean anything, because the rule in the meat trade is sell it or smell it.
Yeah, well, that's true. It's like the old egg contracts like we used to have many years ago. Rich, we have one other question that someone's asking, and that is, if you had to pick one trade here for the next couple of weeks based on what's going on in all these markets, which would the one that you would like the best?
Well, I've got several spreads on that I like the best, but most people can't really trade spreads. I guess I would be looking at a place to own the hogs and a retest of this week's highs in cattle next week after that cattle and feed report's out. If it fails, I'll then sell cattle against my hogs.
Mm-hmm. Rich, I remember a couple of years ago when we were in the hog market, the hogs were trading down or below 40 cents. And you were on our show, and you said this was probably the best value you're going to see in commodities in the next several years, and it certainly was. They almost tripled in price from that level, didn't they?
Yeah.
Oh, wow.
I wouldn't be surprised if the hogs don't take out their lows of a week and a half ago, but I think that you'll find rejection of that low price, and that there'll be demand down there, and we'll see a turnaround, kind of like we saw in platinum yesterday and natural gas, and so I just look for opportunity where I think I can identify there's some value, and and price rejection, because the bears take a lot of bullets to get something to go through a new low, and if it doesn't follow through, they're going to start to cover their position.
Well, we're seeing pretty much the same thing in sugar too. We got down below 11 cents in sugar for the second or third time in the last 6 months, and each time it snapped back above that. So it looks like that 11-cent area in sugar might be one of those areas that we're looking at that look pretty interesting. But I certainly agree with you in those hogs, because they really have they have a very nice pattern as far as, let's just get this up here so the folks can see it. They have a very nice pattern, as far as a technical pattern. Let's get this up here so the folks can see it, because they're anything below 50 cents looks like it would be a pretty much of a slam dunk, and if it gets below 45, I guess you'd have to, set it free. But right now, it looks like they have a really good bottoming pattern here in the December hogs. Rich, I know you're real busy, so I'm going to let you go. I want to thank you for being on. We'll have you on again in a few weeks. So take care. Give everybody in the family my regards, and I hope to see you soon.
All right. Thanks. Trade well.
You bet. You bet. Rich Anderson of Anderson Capital Management, folks, one of my old-time friends, going back about 45 years. So anyway, in fact, one of his employees, Simon Lee, was that was Cy's first job working for Rich, and Cy says Rich was a ruthless boss, and I can believe that. And he's a super nice guy. Okay, let's move on here. Take a look here on those hogs, folks, on the Christmas hogs, because that could be one that would be real interesting in it. The margin on the hogs is very, very small, and so it really is at a it's real easy to get into them. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're going to continue on with these grains. Mr. Z just brought something to our attention. This is the nearby soybean meal contract, and as you can see, we're trading around 328. The low had been down around 320. There's a possibility we could go down one more time. That would be down about $1,300 in meal. This would mean that you'd be looking at something that would be really bearish, but whether that is going to be the case or not, we'll have to wait and see. So, but this is a nice pattern. The soybeans have had a 40-cent rally off the bottom, so a 25-cent pullback taking them down. See 25 cents off of 65, down around 840 in those November beans would be something pretty good to look at. Now they are saying that the cost of production is around $9, but that varies by farm in which particular state you're in, and also the loans that you have out against it. So just keep in mind. Also, that is true in the hogs, even though, like Tom, even though Rich mentioned that he thought that the cost of production was down around, that 50-cent level where we're trading in these hogs. their cost of production could be actually lower for some farms, but the average is what he was talking about. So pay quite attention to that. As far as the U.S. dollar, we posted the copper. The copper, Terry, is good for a rally here. I mean, we've been down 40 cents, and it's due for a rally. We posted those charts. Fact is, I sent a couple of charts out on videos about those metals last night because they're at a really, really critical level to look at. But we're down. You know, we went from 331 down to roughly 62. So we dropped almost 50 cents. You know, that's about 12% of the value of copper in the last 5 weeks. So it is oversold, and a 382 retracement on those, Terry, would get you all the way back. That'd be a 15-cent rally in copper. That's over that's $4,000. So you keep an eye on that one. That's got a real good chance. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.